The world's largest custodian bank, $52 trillion in assets, just confirmed it's launching Bitcoin and Ethereum products. The warm-up is over. The next four hit harder than that one. Bitcoin slams straight into 82,000 resistance, with on-chain activity at a 2-year low. Toncoin ripped 32% in 24 hours after Pavel Durov pulled Telegram deeper into Ton. Colombia's president floating Bitcoin mining for the Caribbean region. Ripple's CTO admitted he's actually scared to share bullish takes anymore. And XRP holding 143 with market liquidity at a 5-year low, which is the one I want you to stay for because that liquidity number it's quietly setting up the cleanest higher-low structure on the chart. All right, lineup is stacked. Let's move. Custody bank first. This one is bigger than people realize. Mellon, the world's largest custodian bank, is launching Bitcoin and Ethereum investment products for its clients. According to the U Today report, this is the institution that holds custody over more than $52 trillion in assets, and they're not running an ETF play here. They're going direct. Look, this matters because Mellon is the bank that other banks use. Pension funds, endowments, sovereign wealth, they all sit on this rail. So when Beanie says it's offering BTC and ETH products, every fiduciary downstream just got a green light. And honestly, the timing tells you everything. Bitcoin holding above 80,000, ETF flows steady, and now the custody pipe is opening up to trillions in dormant capital. This is the plumbing being laid for the next leg. Now look, if mornings like this, where you actually understand why a story matters before markets open, is what you want, hit subscribe. That's the whole point of this channel. 5 stories every weekday, signal only. Speaking of signal, the BTC chart itself is at a make or break level right now. Bitcoin trading at 81,370 right now, and according to the investing.com analysis piece, 82,000 is the line every desk is watching. But here's where it gets weird. A separate on-chain report from the same publisher shows Bitcoin's on-chain activity has collapsed to 2-year lows, even as price holds above 80,000. So you've got two opposing forces. The bulls say price holding 80 without retail volume means institutions are absorbing supply quietly, classic accumulation. The bears say no on-chain activity means no real demand, just thin air supporting the price. One ETF outflow day and it cracks. Both sides have a real case here. So which one wins? Watch the 82,000 daily close. A clean close above 82 with rising spot CVD confirms institutions. No close and stalling volume confirms the bears. The Friday daily close is the tell. Now to the chart that did break out today. Toncoin just ripped 32% in 24 hours to $2.89. Per the Bitcoin.com news report, that's a 110% gain since Telegram founder Pavel Durov announced what he's calling a regime change, pulling Ton development back in-house and slashing on-chain fees by 6-fold. Think about this for a second. Telegram has roughly 900 million monthly active users. A 6 times fee cut combined with deeper native integration it's basically Durov turning Telegram into a wallet for nearly 1 billion people. So here's the question I want your take on. Is this the start of Ton eating into Solana and BNB chain territory for meme coin and payment volume? Or is this a Durov pump that fades once the announcement dust settles? Comment your call. I want to hear which side you're on. Now, from 1 billion users to a country-level move on Bitcoin. Colombia's president just floated Bitcoin mining as a transformation play for the country's Caribbean region. According to the Bitcoinist report, the trigger is Paraguay, which now controls 4.3% of the entire global Bitcoin hash rate. 4.3%! From a country most people couldn't find on a map 2 years ago. And the Colombian president, he saw that number and started asking why his country isn't doing the same. The pitch ties into stranded energy in indigenous regions, plus tourism economics on the coast. Now this is exactly the pattern El Salvador kicked off and Paraguay scaled. When a sitting president says the word Bitcoin mining in a national context, it's almost never a one-off. It's the first signal of a multi-year energy and policy pivot. Latin America is quietly becoming the loudest hash rate story on the planet. Speaking of quiet stories, the last one is the one most people are missing. XRP sitting at 143, and per the CoinTurk report, market liquidity across the order books just hit a 5-year low. Now, most traders see the words 5-year liquidity low and they panic. Look, here's what they're missing. The price is forming higher lows, so you have shrinking liquidity and higher lows simultaneously. That combination it's textbook accumulation. Thin books, no sellers showing up, but every dip getting bought a little higher than the last. The CoinTurk piece flags this as quiet buying momentum. And historically, this is the structure that precedes the violent moves, not the slow ones. Because when liquidity is this thin and a real bid arrives, there is nothing on the offer side to absorb it. The price gaps. Here's the challenge. The people who position before the liquidity returns are the ones who catch the move. The ones waiting for confirmation buy the wick. That's the whole game on XRP right now. BNY Mellon opening the custody pipe. Bitcoin facing 82,000. Toncoin up 32% on Telegram integration. Colombia eyeing Bitcoin mining. XRP coiling on 5-year liquidity lows. Today is the day institutional rails and quiet accumulation lined up at the same time, and that combination rarely stays quiet for long. This is not financial advice. Always do your own research and never put in more than you can afford to lose. If this saved you an hour of scrolling today, subscribe. That is what I am here for. 5 stories every morning, no fluff. See you tomorrow.